So you just got a pay rise. Congratulations, you're earning more than ever before. But for some reason, instead of feeling richer, you're wondering why your money isn't stretching as far as you thought it would. Now, first up, you are not alone. In fact, it's not your fault, but it is your responsibility. But here's the thing, if you don't take control of this right now, you'll end up running faster and faster with more and more pay rises, but you'll find that you're stuck in the same place and maybe even worse off. So in this video, I'm going to be breaking down exactly why your pay rise isn't helping, and more importantly, how you can fix this with practical strategies that will change the game forever. So let's set the scene. You've worked extremely hard to get to the salary you're earning, right? You've done the hard yards to climb the ladder, you've put in the late nights, you've put yourself in a position where you're now earning maybe 50, 60,000 pounds per year, or maybe even more. But instead of feeling like you are winning, for some reason it feels like you are stuck. Your bank account isn't growing the way you thought it would, your savings simply aren't moving, and that dream you had of buying a home feels like it's constantly moving further and further away. Does that sound familiar to you? Now, let me tell you the truth. This isn't something that you are imagining, right? It's something you can maybe feel, but maybe can't explain. And the truth is, your money isn't working as hard as you are. And I'm going to show you exactly why that is. So let's start off by talking about the tax trap. And I'm going to break this down with a real example so you can kind of make more sense of it. So let's assume you're earning, say, £55,000. The first £50,270 at the time of recording, you will be taxed at 20%. But for every pound you earn above that threshold, you will be taxed at 40%. So let's say, for example, you manage to secure a £5,000 pay rise. Around £2,000 of that pay rise disappears right away in tax. And you then add national insurance, student loan repayments, and all of the other expenses, and you'll realize that you're actually left with less than half of the pay rise you've just earned in your pocket. But it doesn't stop there. Now let's talk about something that has also been quietly robbing you, called inflation. Now, some of you may have heard about the term before, but maybe like most people, you've never had it explained in a way that makes sense to you. So let me try and break it down for you in a way that helps to make the picture as clear as possible. Now, inflation is what happens when the cost of the things that you buy goes up, right? So think about things like your shopping, your rent, your energy bills, petrol, all those things that you spend on a day-to-day basis, the cost is going up over time. And this is happening whether we like it or not, constantly throughout the year. Now, it's the reason why the same weekly shop that used to cost you maybe £50 is now costing you closer to £70. It's the reason why your rent keeps on going up higher and higher every single year. It's also why filling up your car with fuel feels like a bigger hit to your wallet than it did even just 6 months ago. So here's how it generally works. As prices rise, the value of every single pound that you earn goes down, because ultimately if the cost of things is going up, but your earnings stays relatively the same or isn't keeping pace, then you are not going to be able to buy as many of the things you once were with the same money that you previously could. So in other words, the money that you earn doesn't stretch as far as it used to. So you might be earning the same amount or maybe even get a pay rise, but because everything around you costs a lot more than it previously did, it can feel like you're treading water or even sinking. So let's make it a little bit more practical. I want you to imagine you've got this bucket of water, and every single drop in that bucket represents the hard-earned money that you are earning each year. Now, inflation is like a slow, invisible leak in the bottom of the bucket. No matter how much money you keep pouring in and try to increase the capacity of the bucket with water, it keeps on draining out at the bottom. So even if you're pouring faster, that is, you're earning more money each year, you're still losing water unless you can plug the leak. And here's why this hits so hard. You can feel it in all of the little ways. You'll notice it when your electricity bill is higher than usual, or when your landlord sends you an email letting you know about another rent increase, or possibly even when you go to the same coffee shop you've been going to for years and the cost of your latte went up by 50p. You see, it's not just one big expense that suddenly increases, it's everything going up in price all at once. And that's what adds to that feeling of frustration and helplessness when you know how hard you've worked for those salary increases, but still feeling like you're struggling to feel the fruit of the hard work that you've put in. So you might have even thought to yourself, like, why does it feel like I'm earning more money but I'm still struggling to get ahead? Because once upon a time, when you were maybe on 20, 30k, you thought that by the time you get to 60k, buying your first home was going to be a no-brainer. It was going to be easy as pie because you knew that you would have enough money coming in. But when you've actually reached that stage, because of all of these factors contributing to the changes in your real experience, it still feels like you're sinking. And a big part of that is because inflation is working against you. And here's the kicker, it's not just the fact that the price of all these things is going up, it's the fact that the prices of all these things is going up significantly faster than most people's pay rises. So that means your purchasing power, the real value of your money that you are working hard to earn, is shrinking over time. Hence you are earning more, but you're actually poorer. So if you've maybe been feeling like your salary hasn't been going as far as it used to, or maybe even those hard-earned pay rises aren't giving you the impact you were expecting, you're not imagining it. Inflation is the invisible enemy draining your resources and keeping you stuck in the same place. But once you understand it, that puts you in the position to start taking the steps to fight back and protect your financial future. Now let's talk about one of the sneakiest ways your pay rise ends up shrinking. It's called fiscal drag. And maybe you have or haven't heard about it, but I'll try and explain it in simple terms. So imagine this. Normally when inflation causes prices to rise, governments are expected to adjust the tax thresholds to keep things fair. So in other words, what that means is that as everything becomes more and more expensive, they should increase the point at which you start paying tax to also keep it in line so that you can keep pace with the cost of living. So in other words, as everything becomes more expensive, they should increase the threshold, the point at which you pay higher taxes so that everything is kept fair and keeps pace with the cost of living. But here's what's been happening recently. Governments haven't been doing this, right? So whether it's the previous Conservative government or the current Labour government, the result is exactly the same. Tax thresholds have been frozen while inflation keeps pushing up prices. So as your salary is increasing, the tax thresholds have stayed the same, meaning that more of the hard-earned money that you are earning is going towards tax rather than you being given some level of relief so that you can feel the impact and you can still afford the things that you once were able to on your previous salary. Effectively, whilst your salary is increasing, you are being pushed into higher tax brackets even though your income isn't actually growing in real terms. So it's like they're secretly pulling more money out of your pocket without officially saying, we've raised the taxes. Different party, same outcome, right? Now let's put this into perspective. Let's say a few years ago, you were earning around £45,000 and you were comfortably in the 20% tax bracket. Now, thanks to a couple of pay rises, you're now earning £55,000. But because the higher tax threshold hasn't been adjusted for inflation, that extra income that you are now earning is getting taxed at 40%. You're working harder, you're earning more, but you're not feeling any richer. That right there is fiscal drag. It's the government's stealthy way of increasing their tax revenue while leaving you with less disposable income. And it's extremely frustrating because for most people, this is something that is happening behind the scenes. It's invisible. And such people are buying into the propaganda that the government promotes of how they are for the working person and trying to do what is best for the working person and not raising taxes, when in reality, they're literally pulling money out of your pockets. Now, whether you're for it as a concept or not is neither here nor there, but once you understand it and you understand what's happening, you can start taking action to protect yourself. Now, another thing that adds onto this problem is the fact that as your income grows, it's tempting to upgrade your lifestyle, right? A nicer car, better holidays, more nights out, more ways that you might now start spending money on things that you once couldn't afford because ultimately you've worked hard to deserve it. Now, trust me, I'm all for enjoying the fruit of your hard work, but it's something you have to watch and be mindful of because before you know it, all of those little upgrades on top of all of these other problems we've just mentioned will eat up every extra pound you're actually earning. And what that does is it leaves you in a position where if it's not managed well, you end up feeling stuck, earning more money on paper, but actually keeping less. Now, here's the thing. If you don't address this, if you don't address any of these issues we've just spoken about, here's what's going to happen. You're going to keep running faster. You're going to keep working harder. You're going to keep getting those pay rises, but you're going to feel like you are never getting ahead. And your savings will stagnate. Your dream of buying a home will slip further and further away, and you'll stay stuck in the cycle of earning more money, but keeping less. And here's the harsh reality. The system isn't designed for you to win by accident. If you don't take control, you'll keep working harder just to maintain the status quo. But the good news is, once you understand how to play the game, you can flip the script and start winning. You can put yourself in a position where these things are no longer happening to you, but you are strategically setting your lifestyle up in a way that causes your outcomes that you've been dreaming of, home ownership and more, to become a practical and tangible reality. And that's exactly what I'm going to help you to do in the next few sections of this video. Step 1. Track every pound. So the first step is understanding where your money is going. Now, most people have no idea how much they're spending on things that they don't even use. I've been there. I've been the person who has enjoyed spending money, figuring it out, and especially when, like, this is the reality. As your money goes up, depending on the lifestyle you live, you can very comfortably reach a point where you're able to spend, even without planning, on all the things that you want throughout the month and not be left in a position where you are desperately waiting for the next paycheck to come in. You can still have a surplus. And because of that comfortability, it's very easy to become less disciplined and diligent about where every pound is going and where you might actually have a lot of waste going on. So it's important to figure out and have an idea and be in touch with everything you're spending money on. So you might want to start tracking every transaction for maybe a month or so using apps like Monzo, right? It's easy to get it categorized and to start getting summaries of different things where your money is going. Or maybe just use a basic spreadsheet. Take things a step further and start planning where your money is going to go in advance before you get paid. That's the advanced strategy. Now, you might discover that you're spending £200 a month, for example, on unused subscriptions or convenience purchases or unnecessary upgrades or even those takeaways that just keep on compounding. And I want you to think about it like this. £200 a month adds up to £2,400 a year. That is money that could go towards a property deposit, it can go towards investments or other wealth building goals. So awareness is the first step towards taking control. And this is the thing, I've just used £200 as an example, but if you really start going through the detail of where you're spending money, I'm pretty confident that in the kind of income brackets we're talking about, you'll be able to find a lot more than £200 per month. Step 2, now let's talk about accountant. If you are earning £50,000 or more and you're entering the 40% tax bracket, you cannot afford not to have an accountant. I repeat, if you are earning £50,000 or more per year and you're entering the 40% tax bracket, you cannot afford not to have an accountant. This isn't just about filing your tax return, because a good accountant is your partner in keeping more of your hard-earned money. And here's how. A good accountant will help you to identify expenses and strategies to reduce your tax liability. For example, if you work from home, which most of us do now, you might be able to claim part of your rent or your mortgage as a home office expense. Your phone, your internet bills, if it's used for work, could be partially deductible. Travel costs, professional memberships, and even training courses might qualify. Now, for business owners, they'll also help you to make use of capital allowances for equipment and machinery or claim tax reliefs that you might not even know exist. And here's where we go another level deeper. Stop trying to be too smart, okay? If you are running a side hustle and you're keeping it off the books, you are probably leaving money on the table. Now, by formalizing your self-employment and your side hustle and declaring it in your tax return, you can find that you're able to lower your overall tax liability. And these are the kind of things that you should be speaking to a good accountant about to make sense of what makes most sense for you. And here's how. Legitimate business expenses. So things like software equipment, travel, marketing can reduce your taxable income. So for every £1,000 in expenses you claim, you're potentially saving up to £400 if you're in the higher tax bracket. And this doesn't just apply to your side hustle income, it can also reduce your overall tax which is owed, letting you keep more of your pay rises too. And here's the other thing, look, a great accountant will help you to understand how being self-employed, setting up a limited company, or even using both can create a tax efficient strategy tailored to your unique financial goals. Now, the right strategy is going to vary from person to person, but this is why having a skilled accountant who knows the rules and how to apply them is an absolute no-brainer. They are not just a cost, they're an investment that pays for itself many times over. Now, step 3, let's talk about savings, right? Now, one of the easiest ways that you can start building wealth is to automate your savings. So let's say your take-home pay each month is around £3,300. If you set up a standing order to move just 10 to 20% of that into a savings account as soon as you get paid, that's £330 to £660 a month building quietly in the background. And this is where, again, I mentioned apps like Monzo can be a very helpful game changer. There are others as well that are comparable, but they do the same thing. They allow you to set up sub pots and sub accounts within your main account, which you can also hide and just set up all the automation so that this transaction happens as soon as you get paid and you don't even see it as it's building, right? It helps with discipline and all those kinds of things too. Now, over a year, you'll have £4,000 to £8,000 saved effortlessly. It's simple, it's automatic, and it puts you ahead without requiring extra effort. And if you think it's going to be hard to save that sort of money, you need to think back on the fact that there was a time when you were earning significantly less than you are now, and somehow you were still able to survive. So that's where, like I said, going through your expenses and finding where all of that wasted money is going that you can maybe put aside for a season to start building up your savings and help you take more control of your finances. And with that said, let's talk about savings versus assets and why, spoiler alert, property wins every single time, right? Now, let's compare saving cash to investing in property. Now, with that said, so if you were to save up £10,000 in a bank account for 2 years, if inflation's running at about 5%, then that means that your money is losing £500 in value each year. So after 2 years, it's effectively worth £9,000, even though you might see a balance of £10,000. Why? Because the cost of everything else has gone up. So that same £10,000 in real terms is worth £9,000. Now, let's say you took that same £10,000 and you put it down as a deposit for a property that was worth £200,000. If property values were to grow by, let's say, 5% each year, then that property would grow by £10,000 in value over that 2-year period. So effectively, your £10,000 deposit has effectively doubled in equity growth, because if you would sell the property or tap into the equity through smart remortgaging, you would effectively have £20,000 worth rather than 10. So the choice is clear. Saving keeps you somewhat safe, right? But the reality is your money is going down in value. So yes, there's a place for saving for a period of time, but as quickly as you possibly can, you want to take those savings and convert them by putting them into property so that your funds and your assets can start causing your money to grow rather than shrink over time. And in today's economic climate, focusing on assets is exactly how you stay ahead. So let's bring it all together. If you've been feeling like your pay rise isn't doing what it should, like you're earning more but keeping less, now you know why. Taxes, inflation, lifestyle creep, these are all real barriers, but they're not impossible to overcome. The key to this all is taking control of your finances instead of letting them take control of you. Track where every single pound is going. The sooner you start that habit, the more effective you will be as your income continues to increase over time, because what you do at this level is the same thing you're going to be doing at a much bigger level too. Formalize that side hustle that you may have and use it to lower your overall tax liability. Work with a freaking skilled accountant who can show you how to keep more of your income while staying 100% compliant. Automate your savings so that you can start building wealth in a much more effortless manner. And most importantly, stop leaving your money in the bank account, thinking that it's somehow safe there, when truthfully what's happening is it's shrinking in value, and start investing in assets like property that grow in value over time. Look, this isn't about chasing money, it's about mastering the system so that your money is working for you rather than against you. Now look, if you're a working professional or a business owner earning £50,000 or more and you're ready to take the next step towards wealth building through property, here's what you can do. Hit the link in the description and book a free consultation call. Now in this call, what we'll do is you'll just explore your situation, whether we're a good fit to maybe work together, and look at how we might be able to help to accelerate your wealth building journey. This isn't for everyone, and that is okay, but if you do meet the criteria and you're serious about building a strong financial foundation, Let's see what's possible. Thanks for watching this video. I hope it gave you real clarity on how to take control of your finances. And remember, you don't have to feel stuck or let the system hold you back. If there's anything that you didn't understand from this video, listen and re-listen again until you're confident about all of the concepts so that you can take the practical steps and start taking control today. See you in the next one.